Good evening, this is Nick Inman from VolumeProfileTrader.com on Wednesday, November 23rd, and we got followed through to the downside today after some news saying, yesterday afternoon, saying there will be stress tests for the banks in the U.S., including Bank of America and Citigroup, and so the market continued lower today. You can see just based off the whole moving averages that this market is definitely trending down. It's very steep, and there's a lot of pain in this chart right now from buyers who have bought at higher levels. They're now puking it up, and it will lead to opportunities for a long trade to the long side, and we're probably getting close, but we are breaking key levels of support. So it's getting to the point where you're playing for a bounce, but how high can it go? And we're going to figure that out tonight. So first things first, markets closed on the lows today, right around 1160. After breaking through this important support level at 1180 to 1190, we broke through that, and we have a gap that is close to being filled right around, I don't know the exact price, but let's call it 1155 on the S&P futures contract. On the actual SPX, the S&P 500, that's around probably 58, 1160. So basically not much lower from these levels. And if I zoom out, the point of control from back in August, the point of control for that level is 1140. So from 1140, that's one of our downside targets. And from there, sure that there are support levels on bigger time frames, but do we really need to know anything more than our next target down, 1140, and to know that these whole moving averages are still moving straight down? So until these whole moving averages start to intertwine between price or start to turn to the upside, the trade is to sell into strength. And as much as we wanted to have a bounce off of the important 1180, 1190 level, we didn't get it. And that's the market telling you that things are weak. There's a lot of risk out there, risk of recession, a global recession. And unfortunately, it's just the environment we're in. Now, there are opportunities for both the long and short side, and hopefully we can cover a few of those tonight. But being that tomorrow's Thanksgiving and Friday's a half day, it's going to be one of those situations where it'll be best to wait until Monday. So if we look at the Dow is right at the value area level for the year, so there's potential for a bounce, and the Dow has been underperforming to the downside, and what I mean by that is it hasn't sold off as much as the rest of the market, or as I should say, against the S&P relative to its value area and its important support levels. The Dow still has a chance to hold support, where the S&P and NASDAQ both have dropped below support. So the NASDAQ, I was saying last night, have a stop below Monday's intraday low. You should have been stopped out today if you were to the long side, which is good because that would be a small loss. Therefore, if this thing keeps going to the downside to test these lower levels, you're going to be fine because you basically took the action to get out of your position when you first knew it was right to be out. So sure, this thing can poke its head back up and you can just buy again, but for now, it's especially going into Thanksgiving and Friday, there's no reason to be involved to the long side. Oil, it's reversed off of the levels we've talked about. It overshot to the upside and is now traded back down to the lower end of the range. So we're probably going to consolidate some on oil. We have some downside potential basically to $90 or lower. We have these moving averages moving up. So maybe the low 90s to mid 90s, that could be a potential support level. Or it could just stay at these levels right here and just wander around. But oil is one of the best performing commodities out there right now, and it's been a nice move from the October lows up until the 102, 103 level. But for those who caught that move, definitely time to ring the register. No reason to hold on expecting the unexpected, which is just a continuation to the upside. Let this thing work its way out and consolidate prior to basically getting long again. Or, let's put it this way, if you have a bias to the short side, if you believe that this is as high as oil's going to go, then your stop goes right above these recent highs. So, now Amazon, it was an interesting stock today, and no, it's not necessarily at a great, well, it performed well. Yeah, it was down $1 or 1 3/4%. So it won, down pretty much with the rest of the market because it opened higher. It opened at the top end of its range that it's been in, whereas the market gapped lower. But it didn't trade to the bottom end of the range, and it's just staying basically within this range. So if this hangs around for another couple of days, this could be a nice opportunity for an upside bounce, like we talked about last night, to the anywhere from basically this gap close, which looks like it's around 197, 198, 197.43 about, and upside maybe up to 205. So this could be a bounce opportunity, but wait for it to basically give you the signal. Now AT&T, this one has fallen back down to the lower end of its range, the value area low for the year. Keep an eye on this one. This could be a trading opportunity. Remember, this one yields around 7%. So this could be a nice, basically, remember with names that pay dividends, they basically have an underlying bid to the name, and so just like any dividend payer, people will be interested in buying AT&T on weakness because basically the lower the price of the stock goes, the higher the yield goes. So, and this one is a 6% dividend payer. Gold's holding its own. It was down only 0.3% today, and we're seeing a nice support at this value area high for the year. It's also basically a high volume area for this range that it was in back in September, October. So it breaks out resistance, which was right here, should become support. So keep an eye on it. And with all the turmoil in the world, and especially over in Europe right now, this gold should do relatively well, and it may not go up, but it shouldn't go down a lot. So keep your eye on it. If you aren't long but want to trade gold for an opportunity, just keep a stop right below the recent lows. The euro continues to move lower, and it looks like it's going to test this lower high volume area down anywhere from 1.32 to the recent lows we've seen, and ultimately this low back down back in October at $1.31.6. That looks like your levels in the euro, and it has led the equities market lower since we topped out at 142, which was the point of control for the euro for the year. We have sold off since, and like I said, it's led the market lower. So, and we had this sideways consolidation zone that we talked about yesterday, and we were talking about how it couldn't get above this point of control, and sure enough, that was enough to, that wasn't the leading cause of this moving lower. Some type of news does that, but it's frustrating right now in the market, because as much as we want to see the market go up for sentiment, for business, for the global economy, it's not, and it's just the market we're in right now. So it's tough. One thing that is working is holding U.S. dollars, and you should have a lot of those in your portfolio right now. There should be no reason that you're highly invested in the market right now, because the market it's struggling, and as more and more people sell stocks, more people look for safe haven like U.S. bonds, the dollar should continue to rally, and you can see it was up another % today. It continues to rise, and it should continue to rise until it comes up into this 80 level, where we should see a little bit of selling pressure. But until then, we ride this dollar up until it basically kicks us out, and it wants us to put our money somewhere else. Okay, one name I wanted to cover, and I can use any name, but we're just using the TZA, which is the inverse small cap ETF that's leveraged times 3. So it's a quick mover, and what I want to show you is what a turnaround in the markets looks like, and using volume profile, that is. And we see our downdraft, right tool for the right job. We see our downdraft, and we found our low in TZA. And you see that we didn't immediately, on this 1 hour chart, we didn't immediately, race off to the upside. We balance. And that's what markets do. They stop, they trend, they balance, and they repeat, and they go all different directions. So it's tough to just, try to buy at the low and expect just this thing to rocket off to the upside. Rather, it takes time for for markets to balance. Not all the time, but most case scenarios, especially for market tops, which is the exact opposite of what we're looking at here. Market tops usually take a while to process and to form, whereas market bottoms tend to be events rather than, basically long drawn out situations. So going back to the TZA, you can see that we have a nice support level at this 29 where the point of control formed, and you can see every time it got into that zone, it was right to be a buyer, and then we poked our heads out above this downtrending resistance line, and that was all she wrote. Then we got our breakout to the upside. You see these whole moving averages, they turned around, they're pointing straight up now, and now for the TZA, we are at the point of control for October. Now, it's more important to know what the point of control is for the relative index, and you can see it's already past its October point of control, and it's basically breaching the August point of control, and now we're looking for September's point of control. So there is, eventually this market will bottom, and you will get an opportunity to trade to the upside. But for now, would you rather be long a name like this, or would you rather be long the market? And right now the trend is down, and until we see price and these whole moving averages start to intertwine like we did here, it's tough to get involved in this market. But you have your downside levels, which is 1155 on the S&P futures contract, and then 1142. And then below that, if the market gets to 1142, I will send out an email telling you levels below that. There are plenty to look for, including one that totally marked the lows here. We were all in at these lows with the S&P 500. If you were following me, then you would have had a great trade to the upside, as we did. We were in this move the whole time, and then we caught this move on the breakdown. So volume profile, it's as accurate as can be, and it gives you levels to look for, and as price develops, it will give you the levels to trade off of, and your job is to trade in the right direction. And by doing that, we use chart patterns and moving averages to get the hint of which way this market is tilting. So anyways, I hope this helps. I hope you have a great Thanksgiving. If you haven't already registered at volumeprofiletrader.com, go ahead and do so. It's free. I haven't sent out any blogs the past 2 days because there really hasn't been any news to talk about that I haven't already said. So, like Volume Week, it's almost over, half day on Friday. Like I said, I hope you enjoy your Thanksgiving. I'll put out a video for the weekend update, and hopefully we can pick out some trading opportunities. But until then, have a good night.